Guys, we had some big news today from the Federal Reserve. So, if you guys have been watching markets and interest rates, I will give you guys the update on where we are in our economy and where we are heading. So, basically, what the Fed said was they chose to keep interest rates at the same rate at what they are, which is around 5%, which means that mortgage rates, which are currently at around 8%, have peaked. We can finally breathe out and know that interest rates for mortgages are probably not going to get any higher. 8% is the worst, which means this is probably the peak pain of real estate. Um, this winter is gonna be rough. They said basically this winter is gonna be rough for real estate, and they had their eye on residential real estate. I mean, for the commercial real estate market, I'm not even sure what's gonna happen with that, but I know for the residential, right now, sellers are gonna have to, lower their price, and because buyers just cannot afford that much, and so if we're at the peak, that means, at least 3 or 4 months more of data. And if we can start to beat down inflation, that gives the Fed some wiggle room basically to start lowering rates incrementally. And they're probably just going to do like quarter rate decreases. So it'll be kind of like a stair step down. And then, I'm hoping that like they start lowering rates like halfway through next year, but just according to their projections, they do not foresee it until like the end of next year. I'll go ahead and share my screen and we can look at some articles basically on what what they're saying. So, yeah, articles are saying that it's possibly the end of the tightening campaign. Um, Basically, what that means is like we're not gonna like go to the moon again. Like stock market's not gonna like start just going up crazy. Like I think where we are right now is like at the peak, like at the bottom, and we still have like a long ways to go before we get back up to a peak. But let's look at the S&P 500. We were at the peak of like 4,750. We went all the way down to 3,500, back up to about 4,400. Now we're sitting at around 4,200, but I do think, this low is definitely um, a lot higher than the previous low, which we experienced in September of 2020, which was like the lowest local low. And we're still up nearly 15%, actually 18% from that low. So, I think what they're signaling to us is, like the worst has happened, and like now the best is yet to come. So they're definitely painting an optimistic look at the future.